Well, folks, let me be very, very clear. Stocks are getting absolutely obliterated. This is disgusting what is going on in the market right now. We got a lot to get into in this video here today, guys. A lot to show you, a lot to discuss in regards to the market. Absolutely incredible. That's the best way to describe it. Incredible. These drops on these stocks, when you think they have to bottom, like this has to be the bottom, they just break through a new low. And not just like slightly either. That's the worst part. Like we're seeing 5, 10, 15, 20, 30% plus moves on top of stocks that are already down 60, 70, 80, 90%. Moves like we have not seen in modern times. Let's put it that way, okay? I thought we'd started the most let's just start at the easiest, okay? The easiest is big tech, okay? So, obviously Tesla's leading big tech all down today. But I thought there was a few interesting things to pay attention to here when it comes to my big tech watch list, okay? First thing is Apple. Apple's now under 150, 147 coming out today. And the thing I thought was most interesting is Apple's making a move that we have not seen. I haven't seen Apple be the second most down of big tech in honestly probably like the last 6 months. Like to see that stock down, almost leading big tech down today is quite telling with the place investors are in the market. Because when you start to see Apple down, that's when you know that no one wants to hold anything at that point. That's the best way to describe it. When Apple goes down, that means people don't want to hold anything anymore. Okay, let's be quite clear about that. Netflix came to my attention today. I'm looking at this stock at $169 today, and the reason is this just can't find a bottom, and it just breaks through new low after new low after new low. I mean, this stock is getting back to ranges it was, I think, in 2016, 2017, something like that. Like the fall for the stock price has been incredible. And when you start to see these sorts of falls in stocks, guys, and I think this is very, very important for everybody watching this, let me just explain this real quick. When you start to see these drops in these sorts of stocks, even the best of the best companies, okay, big tech, right? At some point, it becomes not even about fundamentals anymore. And it becomes about people just want to get out of the market. And if it's big money, if it's retail, whatever it is, they just want out by any means necessary. And the fundamentals start to not even matter with these sorts of companies. It's not that Apple is broken. It's not that Netflix is broken. It's not that Nvidia just broke through another 52-week low, 168 today. That stock just continues to get pounded, right? Nvidia is not done as a business model. Maybe they report a couple, quarters that come under growth the next couple quarters or something like that. We'll see, but that doesn't mean the company's over, right? Look at FB. That one is, right around lows right now. PayPal just busted through a new low. Shopify. Is this stock really going to hit something with a 2 in front of it? Is Shopify really going to hit something with a 2 in front of it? I mean, that's crazy. Like I never thought I'd ever see Shopify with a 2 in front of it again. I'll just be completely honest. Never. And for the fact that this stock, we have 1 or 2 more bad days in the market, this will have a 2 in front of it. And it will be $200 something, and that is something I thought we'd never see again. Even in a stock market crash, I didn't think we'd see Shopify with a 2 in front of it. With how insane their opportunity is over time and how much that company's grown over the last 5-7 years. Incredible, right? Amazon just busted through another low, and it's like, where's the bottom for you? When you start talking about Amazon, you're like, where's the bottom for Amazon? That's when you know you are just in an incredibly vicious market right now. Okay, the Cathie Wood watch list is awful. Like I have this watch list which has ARK on it, and it also has Cathie Wood's what was her top 10 biggest positions as of a week or 2 ago. I might have to update this because some of these stocks have dropped so much they might not even be in the top 10, but then other stocks have dropped, so they might also not be in the top 10. But anyways, as of a couple of weeks ago, this was our top 10. Unity down 35% today. Coinbase almost a 25% move for Coinbase today. Oh my gosh. But then you look at the numbers of Coinbase and I was like, okay. Square down 13.7% today. ARK just busted through another 52-week low today. ARK is the cheapest it's been. I think it might even be cheaper than it was in the lows of March of 2020. It's certainly right around there. And before that, you have to go back to the drop in December of 2018 to see ARK Invest down this low. And the fall has been nothing short of extraordinary in the worst way possible, right? And you look at these stocks, all of them are at multi-year lows or all-time lows pretty much, okay? And And here these stocks are, and they just can't find a bottom anywhere. And at some point, it's like people are asking, like, who's even selling at this point? That's a good question. Well, clearly there's not enough buying pressure on the market, and clearly there's not enough liquidity in the market right now. And there's a lot of talk right now on the inner circles about liquidity in the market and not being enough liquidity in the market, and things being very, very screwed up when it comes to liquidity in the market right now, okay? The NASDAQ is now down almost 28% year to date. We've never seen the NASDAQ fall like this through the first 5 months of the year, okay? Never, ever. This is extraordinary, almost 28% fall year to date. Even in the 2020 crash, right? We came bouncing back. So by May, the market was down a very small amount. If you look at where the market was at in February before the crash and where the market was at this point in May, it was like, oh, it wasn't even bad year to date. This is awful. And it's just, and even for the NASDAQ, it's like, where's the bottom at, right? People are even asking now, the NASDAQ's at 11.4 today. People are like, are we going to go back to where we were prior to Rona, right? Prior to Rona, NASDAQ was, I think, 9,700, if I recall, and that's what people are talking about now. Oh, maybe we're going to go back there, and we'll see. We'll see what happens, but, this move has been just vicious, right? Let's be honest for a second. Let's be honest, okay? This is ridiculous. Honest company. This company sells diapers, wipes, makeup, needs-based products, okay? And they're taking market share, and great business model, and the company's trading at a 0.8 price to sales ratio with all the growth they have ahead. It's a $2 stock here today. $2. All right. But here's the thing. If you can't find a buyer for Shopify right now, if you can't find a buyer for Netflix right now, if you can't find a buyer for PayPal right now, where the heck are the buyers at for Honest? That's the toughest thing. And so I'm going to share, I bought some stocks here today, and Honest was maybe one of those stocks, okay? And I'll share that in this video as well. But at the same time, I am of the understanding that in this sort of market, it's, you never know where the bottom can be on these stocks. Just for the mere fact that, if everybody just continues to sell everything off day after day after day, at some point there's going to be no one left to sell, but you don't know when that moment is. And for Honest, shoot, I thought maybe that was around $4, $5. And then it busted to $3, and now it's in the twos. And it's just like the fundamentals of companies no longer matter. It's just sell first, okay? You look at a company like Square today, the stock is down about 14% or so. Square, why is the stock down 14%? Is it justified that it's down 14%? Well, it's down 14% because Coinbase reported their numbers, and those Coinbase numbers were quite simply bad. And so everybody's looking at Square now, and they're like, well, your numbers are going to be bad now. Might be right, might be not right. But none of that matters in the market right now. It's sell first, ask questions later, right? I know you guys have probably heard the famous expression, shoot first, ask questions later, right? In this market right now, it's sell first, ask questions later. So if people see that Coinbase just reported a disaster quarter and it went down 25%, people are going to say, hey, Square's next quarter when they report is going to be a disaster. The stock's going to be down 25%. Sell now, ask questions later. That's the movement that investors are doing right now. And I don't think it's the right strategy. I mean, always in the market, it's best to look from like a practical approach and think about like the long term of companies. But let's be quite honest, no one cares about the long term of companies right now. No one cares what Square's doing. No one cares that they have the number one, finance related app in the entire world. No one cares about that. No one cares that PayPal has a number 2, number 3 in PayPal and Venmo. None of that matters right now. It's sell now, ask questions later. That's what people are doing. That's clearly what people are doing. And it doesn't really matter the price. And although Square was I think Square was like a $300 stock at one point. And it might go back to $300 eventually over the next few years. But that doesn't matter in this sort of market. Everybody's just worried about Square going to 50. No one's thinking about, in this sort of market, no one is thinking about, is Square going back to 300? Everybody's thinking about, is Square going to 50? Is Square going to 40? That's what people start thinking about in a bear market, which is clearly what we're in. That's what people are thinking about, and that's why this stock is down 14% today on the back of no news, right? You look at a stock like Upwork today, right? Stock's down 11%. Upwork used to be an investment of mine. It did me great, made a lot of money on this stock, and it treated me very, very well. But this is a stock that's down 11% today, and it's like, why is the stock down 11%? Well, Fiverr reported numbers. Investors didn't like the Fiverr numbers. The stock's down 25% as far as Fiverr goes. So if Fiverr goes down 25%, it's going to pull down Upwork as well. Those are competitors, but at the same time, they kind of trade in baskets. If Fiverr was up huge today, I'd almost guarantee you Upwork would be up huge. And so you look at a stock like Upwork, right? In Fiverr as well, which are huge companies in the freelancing economy that just continues to grow and grow and grow and will continue to grow. And I can tell you, even if companies cut back, they're more likely to use companies like Upwork and Fiverr, right? Because when you got to understand, Upwork and Fiverr, you don't have to hire a full-time employee, right? Like there's a lot of tasks in a business that you might not necessarily need that salaried $60K a year employee, that salaried $70K a year employee. You could maybe hire somebody that's just as good, if not better, on Fiverr or Upwork to handle certain tasks for a fraction of the cost, right? Versus an employee that might cost you 60, 70, 80,000 a year. And so, that's something that business will do well regardless of kind of what happens. Like in a good economy, they can do well. In a bad economy, they can do well. But companies have learned to work remote. And so businesses have learned to work remote. So Upwork and Fiverr are actually in a good spot. But does any of that matter right now? No. Everything I just said, it doesn't matter. It's sell and ask questions later, okay? That's the market we're in right now, right? Look at Palantir, PLTR. This stock is year to date is down almost 63% now for Palantir. My gosh, like incredible, like just an incredible fall for a company like this, 62, 63%. And the thing with Palantir is, I mean, this is pretty extraordinary because Palantir is a company that is pretty exciting for Wall Street standards. Like Wall Street usually gets pretty excited about a stock like Palantir that's seen as kind of like a SaaS business model, right? Which that's what they get grouped into. And whether you feel like they're a SaaS business or not, that's what they get grouped into. And Wall Street loves those sorts of business models, right? But simultaneously, Palantir has a retail investor base around it that is very, very strong. One of the strongest, I would call it, in the market, right? And despite those two factors of Wall Street really being into a stock like this and retail really being into a stock like this, the stock can't find a bottom. It can't find a flip and flapjack and bottom anywhere in sight. And the stock is $6 here today. $6. Holy smokers, that ain't no jokers. But I mean, and this is a company that has massive government contracts. Like the biggest government agencies in the world work with Palantir. But in this sort of market, even that doesn't matter. Like think about that for a moment. That's the sort of market we're in right now. You could have contracts with the biggest of the big companies. Your valuation could already be smashed in half plus some, right? You can have incredible growth, 31% growth of revenue this past quarter for Palantir. But none of that matters in this sort of market. It's sell now, ask questions later. And Palantir's at $6 here today, $6. And if the NASDAQ continues to get hit and the Russell continues to get hit, Palantir is going to continue to be hit. And this baby won't start recovering until the market flips. And that's the hardest thing with this. And so you're looking at it at 6 and you're like, now all of a sudden the theory is not, is Palantir going to $100? No, people are starting to think, is Palantir going to $4, right? And that's just a whole different mentality you have in the market that's so negative right now, right? You look at retail trader investor stocks. I mean, look at the watch list today, guys. Reels down 17%, AMC 11%, Fubo almost 10%, The Chef 9%, Hims 8%, Hood 8%. I mean, my gosh. The only stock that's up today is SoFi, but that was after a really downward day. By the way, SoFi, I listened to that conference call yesterday. I liked it. I got to say, I got a lot more research to do before, I make any move there, if I'm going to make a move in SoFi. But I will say, I really liked that conference call. The numbers were pretty darn impressive from SoFi. I got to do more digging there. I will say that one. I'm glad I spent the time to listen to that conference call. I am very glad about that, and we'll see what happens there. But even SoFi, it's like, whew, who's to say that's not going to $4? That's just the sort of market we're in right now. And so, these stocks, they've all been absolutely obliterated, right? Teladoc was a $300 stock. It's $29 today. I mean, all these stocks you're looking at are all down, 70, 80, 90% plus. All of them. and they just can't find a bottom anywhere right now in this sort of market, right? Where it's like, where's the buying pressure, right? Now, something I think is very important. My light went out. Oh well. Okay, might be a little bit of a dark video for the rest of the video. Something I think is very important here is what you're looking at here is S&P 400 mid caps, S&P 600 small caps, forward Ps. Okay, now, I mean, this was as of yesterday, so the number is even lower now. Okay, you can't trade at these low of numbers for too long. Let's just put it that way, right? But you can trade down here, and it's insane. I will say it's insane in my opinion that these stocks are trading this cheap, but it's what's going on. And at some point, like valuations don't matter anymore, right? So for instance, at the end of 2020, going into the beginning part of 2021, valuations didn't matter anymore. We were in the end of a massive bull cycle, and at the end of a massive epic bull cycle, no one cares about valuations anymore. The same exact thing happens in a bear market. When you're at the end of a vicious bear market, no one cares about valuations anymore, okay? It's just sell by any means necessary. And when you're in a massive end of a bull market, it's buy by any means necessary, and that's the way investors start to treat it. And at the end of a massive bull market, you see just ridiculous stocks going to ridiculous prices, and you're like, come on, man, this business model is horrible. They got no future in front of them. It's not good. They're not in a growing industry, whatever, right? But it doesn't matter. Like, you see these stocks move up 5, 10, 15, 20% in a day, and it's like they didn't even have any news, but that stock just moved up like that, right? And when you're at the end of a bear cycle, right, when the indexes are down 25%, 30%, things like that, which the Russell is right around 30% now, NASDAQ's getting close to 30% down now as well, okay? When you're in that sort of market, valuation doesn't matter. It doesn't matter how cheap a stock's trading at a forward P or trailing P. Most of the time those things matter. The majority of the time those things matter. But in this sort of market, it doesn't matter. Like I can see this stock at this insane forward PE and this insanely low price to sales ratio where they should really be at this price to sales ratio. Price to sales ratios, forward PEs, and these sorts of things. When you're in a irrational market, no one cares about that anymore, and it's very frustrating, especially for folks that do care about it. But it is what it is. It's just part of the game, and it's just part of the game. It doesn't last forever. That's the good news. It can maybe last a few months. But I can tell you, it doesn't last forever. And eventually, it does end. And it will end, okay? For a good example of this, right, is if you look at Tesla stock, right, one of the darlings of the stock market, in that Rona crash, this stock lost well over 50% of its value in less than 1 month. And the reason being is, folks were scared. They're like, we got to sell this stock by any means necessary. And I don't care if it's down 52%, 54%, or whatever. We got to get out. We got to sell, right? And Tesla's long-term future, Model 3, Model Y, future vehicles, the EV wave, none of that matters. When you're in a vicious bear market, no one cares about any of that. You could talk about all the long-term stuff all you want and how revenue is going to scale to this and that. And if Wall Street doesn't care about that at that given time, none of that ends up mattering in the end, and you just get a stock to sell off to just insane prices, right? Which I think at that time it was like a $75 billion market cap or something like that, right? An example of the other side, right? At the end of the bull cycle we went through, you saw a stock like AMC, right? Once AMC went over 10, the valuation just got ridiculous, right? But that stock just continued to pump. And, next thing you know, it's $50, $60, $70 a share. And everybody's like, oh, it's going to 1,000, right? And no longer was it based upon fundamentals. It was based upon, we're going to try to squeeze the shorts and do those sorts of things, right? Which I don't mind squeezing the shorts, by the way. But, that's what it became. It wasn't about AMC is going to have this sort of net income in future years, and this is why it should command a $30 billion market cap or a $40 billion market cap or a $50 billion market cap, right? It just was about, it's pumping, we're going to squeeze the shorts, and that's what the story became with AMC, right? And so that's just the market you're in, and eventually that ends. That's the thing. You can't have that last for very long. You maybe got a few months of that activity where the fundamentals are thrown out, but eventually fundamentals do matter. For a certain amount of time, you can get no one to care about the fundamentals of Tesla. For a certain amount of time, you can get no one to care about the fundamentals of AMC. But eventually, that stuff does matter in the end. It just might not matter in the short term, okay? And so that's very, very important for everybody watching this to understand the cycles you go through in the market, okay? Now, something absolutely massive happened here recently, okay? And that thing is inflation today just broke trend. We started to come down. Only a little bit. It was like 8.3 number. But I can tell you that is massive. Now, the market obviously looks like it doesn't care about that today, but the market has a very good poker face. I will say that. The market always has had a very good poker face, and you'll think, oh, this has to be great news for the market, and stocks go down initially. And then you think, oh, this has to be horrible news for the market. And the stocks go down initially and then go up. And it's like, wait, what? What's going on? The stock market has the best poker face I've ever seen, okay? But I can tell you what just happened today is monumental for the future of the market. The fact that we broke trend finally is huge, okay? Because basically, inflation's kind of been on a runaway for a while. Okay. Now, what we need to see in future months is the rate of increase of inflation continue to come down. We need next month to be in the 7s. We need the following month to be around 7 even, or maybe 6s. We need the following month to be, low 6s or maybe 5s. We need the following month to be, low 5s or maybe 4s. As we see that trend play out more and more, the market's going to feel more and more comfortable with what's the Fed going to do, and is the Fed going to come to the rescue, and basically just the market, even more than the Fed coming to the rescue, the market's really scared about just the aggressive nature of the Fed right now and raising rates and those sorts of things. But as you start to go month over month and month and month, where trend just breaks more and more, right? That's obviously going to be a very, very good thing for the market. And, the fact that we finally broke that trend, guys, I'm telling you, it is a massive, massive thing for the market, okay? So, today, what did I do? I bought stocks. I bought 1,000 Chef shares. I bought 2,000 Honest shares. I bought 2,200 Oatly shares. I bought 30 Meta shares, okay? And I know, when you see that, right, it's kind of like, well, why even buy? Every single time you buy, your shares are lower. So why not just continue to wait? I can't invest like that, man. I can't do it. I think the Chef's is disgusting value. I have to buy it today. I think Honest is disgusting value. I have to buy it today. I think Meta is as well. I think Oatly is as well. I have to buy those stocks. And I understand. Tomorrow I could get them even cheaper. And the next week I could get them even cheaper. And maybe next month I get them even cheaper. I don't invest like that. Just bottom line. We're down around 30% on the Russell, right? And maybe we're going to go through an 07 through 09 crash where all the indexes go down 50% plus. And maybe I'm buying when the Russell's only down 30%, but it's going to go down 50% plus. I'm willing to take that risk. That's why I go out there and buy. I stay focused on the long term. And if I see stocks that are way overvalued, I'm going to sell those stocks. And if I see stocks that are way undervalued and I think are going to 3x, 5x, 10x over the next 5 years, I've got to take advantage of those deals. And that's regardless of inflation, deflation, Fed, no Fed, interest rates, any of that. I stick to my game plan. I execute my game plan, and sometimes in the short term it doesn't look right, and it is what it is. But I can tell you, a market like this, it will test you, and it will turn investors into traders, and it's very hard to recover from that. To ever switch back over to the other side. Because then you start going down this rabbit hole of stocks are going down. Let me start buying puts. Oh, let me start shorting stocks, things like that, right? And man, once you switch that side, it's a tough side to get back over to that investor side. I can tell you that. So that's why I just stay focused on long term, make long term decisions that I'm gonna be happy with. I think I'm gonna be very, very happy in a few years from now, looking back, that I bought Honest at 2, and I bought Oatly at 2, and I bought Chef at 6, and I bought Meta at 190. I think I'm going to be very, very happy. And for all the buys I've been doing recently, I think in a few years I'm going to look back and be like, thank you for doing that, Jeremy. You know, that was a tough time to be a buyer out there in the market, and you received a lot of hate, but you made the right long-term decisions for yourself, and you made a lot of money, right? So that's just what I stay focused on. And the rest of this show is going to be the rest of this show. And if we go down 50% plus on the Russell, okay, it is what it is. I will continue to be a relentless buyer. That has been my game plan the whole year. I'm executing that game plan to the best of my abilities, and that will be that. And keep your head out there, guys, in this sort of market. This market does break people. It's already broken a lot of people. It's going to break the last group right now. The last group will be broken. And if this last group isn't broken in what we're going through right now, you're good. Like, you're strong enough to make it through anything then at that point when it comes to financial markets. Much love as always, and have a great day.